Why investing has become a necessity in 2021. In our modern world, there are two ways to make money. The first way is to earn income from either you or someone else. The other way to build your fortune is by investing your assets to increase their value over time. Welcome to our channel, Fortune Focus, and in this video, we'll see why investing has become a necessity in 2021. The goals of an individual depend on several factors, including age, revenue, and risk profiles. These segments often miss their score at a suitable age, with the middle age to first consider investments or force the elderly to budget, taking advantage of the discipline that lacked as young adults. Even though you cannot invest, your income is the natural starting point for an investment plan. The first work for a young adult is a wake-up call that forces decisions to make contributions to IRA, savings, or money market accounts, and sacrifices to balance growing richness with the willingness to gratify. Don't be worried that your parents won't pay for the monthly credit card bill anymore during the period, such as being overshadowed by student loans and car payments. Family planning for many people is at the top of this list, with couples knowing how many children they want, where they want to live, and how much money they need to achieve those objectives. To become an investor is never too late. You may be well in the middle ages before you realize that a life that needs a plan to deal with retirement and old age is fast-moving. Fear can take over if you wait too long for investment targets, but that will be removed once the plan is implemented. Note that whatever your age, revenue, or perspective, all investments begin with your first dollar. Those who invest for decades have the advantage that they can enjoy the lifestyle that others cannot afford because of their growing wealth. Here are some of the investment ideas that you can follow in 2021. The first is to build your cash reserves. In 2021, inventories remain the way to go, but don't expect the market to perform over and over again in 2020. Indeed, by Christmas, the S&P 500 index increased more than 14%, and this is a 29% increase in 2019. This figure, however, both are significantly greater than the historical annual average return of 10% annually. This does not necessarily mean that in 2021 the market is going to dive, but it may be time for expectations to be adjusted. As there is no natural way to offset stock losses of other assets, the default is cash. Second is stocks, still the way to go in 2021. No one can tell for sure what the stock market will be like in 2021, but investing in stocks always has to do with the average, and the norms strongly support the preservation of a significant stock position. That said, perhaps you want to be more selective. The maximum strength of tech stocks is the driving force of major indices, such as the S&P 500 and NASDAQ 100. So it can drag the most significant index down if this sector starts heading south. This is another reason for building your financial reserves. A significant cash position gives you a chance to invest in the new sectors if the overall market declines if you have a heavy investment in S&P 500. The third is real estate. Given the steady increase in residential prices and turbulence in the commercial mobilization market, the sector looks as if it had a mixed bag in 2021. But that's precisely why the next year, it may be worth examining closely. You too might be a great fan of REITs, although the industry was poorly done in 2020. You could become an immobilizer investor. U.S. REITs have dropped 7.25% to December 24, based on the FTSE Nareit Index. However, this leads to a 28% increase in 2019. After both significant gains in 2019 and a solid start to the economy in 2020, REITs looked like a solid bet. But at that time, no one saw the coronavirus, and it turned out to be a game changer. Fourth is pay down or pay off debt. The 2020 experience should be a precautionary story, whether the economy emerges or tumbles in 2021. Millions of workers lost their jobs, tens of thousands lost their companies, and after this minute crash, in late winter, the stock market re-established impressively. It's all about life being unforeseeable. The stock market reached record highs at the beginning of 2020, housing prices increased, and unemployment was record low. So at the start of the year, the general assumption was smooth. And with that being said, it's time to end our video. Do you invest your money? Let us know in the comments. Like this video and make sure to subscribe to the channel for more amazing videos like this. We'll see you in the next video.